Welcome back to the garage. And yes, it's time for this week's token teardown. If you're new here, this is where we take your favorite crypto project, roll it into the bay, throw it up on the lift, and actually check what's underneath. No hype, no marketing decks, no influencer noise. We answer one question. Is this thing a McLaren P1 style hypercar, engineered with purpose, built to last, and worthy of a serious garage? Or is it just a shiny kid car with an old Honda Civic engine, zip-tied under the hood, revving loud and going nowhere? And yes, before you ask, we will talk about price predictions. We know that's everyone's favorite part. But first, we've got to answer the question most people skip. Does this even deserve space in your wallet? Or is your hard-earned money better parked somewhere else? Because price doesn't matter if the build is weak. And before we touch price, before charts, before Lulu even warms up the dyno, we've got to do this the right way. First, credit where credit is due. Huge shout out to Triple X. My brother, thank you. Going through white papers, checking GitHub commits, stress testing assumptions, doing all the heavy lifting in the garage, so these teardowns are real, not recycled takes. This is not surface level lurk, and without that effort, this show doesn't exist. Now, quick favor before we roll any further. Smash the like, hit the follow, and share this with your people. Yeah, even your buddy from work who swears he's investing, but he's really just chasing every meme coin he sees on X like it's a clearance sale at AutoZone. Because in this garage, we break things down so everyone understands, from the coder writing the protocol to the carpenter putting in honest work every morning. All right, let's roll it in. Let's put it on the lift. And now that it's up in the air, let's talk about the pit crew. Who built this thing, what they've accomplished before TAO, and whether this is real engineering or just a good story. Not opinions, not controversies, not chain issues. That comes later. Right now, this is the resume check. Because in crypto, the fastest way to get wrecked is trusting people who've never shipped anything real. At the center of this build are two names, Jacob Steves and Ala Shabana. Let's start with Jacob Steves. Before Bittensor, Jacob was a machine learning engineer at Google Brain. That's not a startup. That's not Web3. That's one of the most advanced AI research environments in the world. Google Brain is where large-scale neural networks are trained, tested, and deployed under real performance constraints, accuracy, efficiency, and scale. Jacob didn't come from pitching tokens. He came from building systems where models either work or get cut. After seeing how intelligence was being centralized inside corporate silos, he left big tech to work on open, decentralized alternatives, not as a product, but as infrastructure. Now, Ala Shabana. Ala comes from the academic and research side of AI. PhD-level machine learning, postdoctoral research, deep experience in evaluating model performance, optimization, and comparative learning systems. Before Bittensor, Ala's work focused on how intelligence can be measured, compared, and improved over time, which is exactly the problem Bittensor is trying to solve. This isn't someone learning crypto first and AI later. This is someone bringing AI fundamentals into crypto. Together, these two weren't building a company. They were building a protocol, something designed to outlive any single team. That work is stewarded by the OpenTensor Foundation. The foundation is responsible for ongoing development, research direction, and long-term roadmap execution. And before TAO became a ticker people talk about, this group had already designed and launched a new Layer 1 focused on AI, built a working incentive system for machine learning competition, attracted a global base of researchers, miners, and validators, shipped major protocol upgrades over multiple years. This wasn't a one-cycle experiment. Now let's talk about the kind of capital that showed up early. Polychain capital was involved before Bittensor was mainstream. Polychain has a long history of backing deep infrastructure projects, not hype narratives, including early positions in protocols that took years to mature. Then came Digital Currency Group. DCG is known for building long-term crypto infrastructure, funds, trusts, validators, and ecosystem companies, not quick flips. DCG didn't just hold TAO. They went a step further and created Yuma, an entity dedicated to operating inside the Bittensor ecosystem. And more recently, XTAO emerged as a publicly listed company focused on holding TAO and running Bittensor infrastructure for institutional exposure. That's a resume line you don't see on meme coins. So if we strip this down to the pit crew resume, founders with real AI credentials, experience in large-scale ML systems before crypto, academic depth in model evaluation, long-cycle infrastructure capital backing, multi-year execution history, no promises yet, no guarantees yet, but this is a crew that has already built hard things before. Now that we know who is holding the wrenches, next we look at what they actually built under the hood. All right, now that we know who's holding the wrenches, let's talk about what they actually built, because this is where crypto usually loses half the room. So we're not doing white paper language, we're not doing buzzwords, we're doing garage logic. Here's the simplest way to understand Bittensor. Most blockchains are roads. They move money, they move tokens, they move NFTs. Bittensor is not a road. Bittensor is a machine shop. It's a place where intelligence shows up, gets tested, and either proves itself or gets kicked out. That's it. Now let's break that down so everyone's on the same page. The mechanic version. Think of AI models like engines. Right now, the best engines are built by a few massive factories, big tech. You don't get to see inside them. You don't get to tune them. You just rent them and hope they don't change the rules. Bittensor says, bring your engine into the open garage. The network puts it on the Dyno, compares it to every other engine doing the same job. If it performs well, it gets paid. If it doesn't, it gets ignored. No badges, no brand names, just output. The coder version. Under the hood, this is a layer 1 blockchain designed specifically for machine learning competition. People run AI models called miners. Other participants test and score those models, called validators. The chain keeps score and distributes rewards based on performance. That scoring system is what decides who wins. Not opinions, not popularity, measured results. Why this is different? Most AI crypto projects do one of two things. They slap AI on top of an existing chain, or they promise AI someday and ship tokens today. Bittensor went the opposite direction. They built the engine first. No flashy dashboard, no consumer app, no shortcuts. Just a system designed to answer one hard question. How do you measure intelligence in an open, competitive way? Now, here's the big evolution, and why this is our second teardown. Originally, everything competed in one big race. That's fine early on, but it breaks once things get complex. So they introduced subnets. Subnets are like race classes. One class for language models, one for predictions, one for data tasks, one for niche intelligence. Each class runs its own competition, but all of them bolt into the same chassis and settle in the same fuel system. That matters because intelligence isn't one thing, it's lots of different jobs. And Bittensor is built to let those jobs compete without stepping on each other. The honest garage take this is not a consumer product. This is not something your mom uses. This is not built to be pretty. It's built to work. If the incentives are right, it becomes powerful infrastructure. If the incentives are wrong, it becomes a science experiment. That's the fork in the road, and that's why the next chapter matters. Because now we've seen the engine. Next, we look at the fuel system. And in crypto, bad fuel blows up good builds fast. Let's talk about the token. All right, now we're at the fuel system. And let's clear something up right away. Tokenomics is just a fancy word for fuel. How much fuel exists, how fast it gets pumped into the system, who gets it, and what happens when you step on the gas. Because you can have the best engine in the world, but bad fuel still blows it up. So let's talk about the fuel powering Bittensor. The token is TAO, and TAO follows a very specific philosophy. There is a hard cap, 21 million. That's it. No infinite printing, no we'll adjust supply later, no surprise dilution. If that number sounds familiar, it should. This fuel system is modeled after Bitcoin. Fixed supply, predictable emissions, and scheduled halvings. Now here's how fuel actually enters the system. TAO is emitted on a schedule. Over time, that emission gets cut in half. Meaning, as the network matures, less new fuel enters the engine. So the system is designed to get tighter, not looser. That matters because early on, fuel is cheap and plentiful. Later on, fuel is scarce, and efficiency matters. Now let's talk about who needs fuel. First, miners. Miners are the ones running the AI models. They burn compute, they burn electricity, they burn time. TAO is what pays them for performance. Second, validators. Validators don't just show up for free. They have to stake TAO to participate. That means fuel gets locked up just to keep the system running. Third, builders. If you want to launch a new subnet, a new intelligence race, you don't just click a button. You have to burn TAO. Think of that like melting down metal to build a custom part. It reduces total supply permanently. So here's the key mechanic-friendly takeaway. TAO doesn't just get spent. It gets earned, locked, and destroyed. That's a very different fuel loop than most crypto projects. Most tokens are printed, dumped, and forgotten. This one is designed to get tighter as activity increases. Now, let's be honest. Fuel alone doesn't guarantee performance. Right now, a lot of demand for TAO comes from inside the system. Miners want it. Validators need it. Builders have to burn it. That's internal demand. External demand, people paying directly for AI output, is still early. And that's okay. Early engines run rich. Later engines run lean. The design here is betting that as real usage grows, demand for fuel grows while supply shrinks. That's the whole bet. So the fuel system verdict is simple. 1. Predictable emissions, halving schedule, real sinks that remove fuel from circulation. That's a serious fuel system. But fuel is only half the story. Next, we follow the power, because fuel doesn't matter unless it actually turns the wheels. Let's talk about the drivetrain, how value moves through this machine. All right, we've got fuel in the tank. Now the question is simple. Does that fuel actually turn the wheels, or does it just make noise? This is the drivetrain. This is how value moves through Bittensor. And this is where a lot of crypto projects fail, because they print fuel, but it never reaches the wheels. Here's how it works in plain garage terms. Value flows forward only when useful work gets done. First stop, miners. Miners are running AI models. They spend real money on GPUs, power, and time. If their model performs better than others in its class, the drivetrain sends power their way in the form of TAO. No performance, no torque. Second stop, validators. Validators don't make power. They decide where it goes. They test models, score them, and make sure the best ones get rewarded. To do that job, they have to stake TAO. That means value doesn't just flow, it gets anchored. Fuel gets locked into the system just to keep the drivetrain connected. Third stop, subnets. Subnets are the gears. Each subnet is its own gear ratio, tuned for a specific job. Language models, predictions, data tasks, specialized intelligence. If one gear slips, it doesn't grenade the whole transmission. That's a big deal. Value can flow to the subnets that are working and away from the ones that aren't. That's real market behavior. Now here's the important part most people miss. TAO is not just a reward token. It's the base asset. Everything settles back to it. If you want to participate deeper, you stake it. If you want to launch something new, you burn it. If you want exposure to specific intelligence markets, you route through it. That's how value keeps circulating instead of leaking out. Garage version. Fuel goes in, work gets done. Power transfers through gears. The strongest parts keep moving forward. No free rides. Now here's the honest assessment. Right now, most of this value flow is internal. It's miners competing, validators scoring, builders experimenting. That's fine early on. What matters is whether this drivetrain can eventually connect to the outside world. Real users, real demand, real reasons for value to move into the system, not just around it. That's the next check, because a perfect drivetrain with no road still goes nowhere. So next up, let's talk about who's actually using this thing. Not on paper, not in theory, but in real life. All right, now we step away from the diagrams and walk the shop floor, because none of this matters unless someone is actually using the machine. So let's answer it straight. Who's really showing up here? First, it's builders and researchers. These are people who already live in AI. PhDs, data scientists, independent researchers, small teams, not retail tourists, not people chasing the next shiny thing. These are folks who already run models for a living and don't want to hand their work to big tech and wait for permission. Second, it's operators, miners running GPUs, validators scoring performance, teams running nodes and subnets. This part matters more than most people realize. GPUs cost real money. Electricity costs real money. Time costs real money. Nobody keeps doing that if the machine is fake. Now let's hit the question everyone asks next. Are there big companies using this yet? Short answer, not really. You don't see Google, you don't see Microsoft. You don't see Amazon or OpenAI running production systems here. That's not a dodge. That's the honest answer. But here's what is happening. You've got large research communities onboarding thousands of data scientists into the ecosystem. That's not hype. That's professional brainpower showing up to compete. You've got real platforms using outputs from Bittensor-based models to inform live markets. That's not theory. That's real-world signal, even if it's still narrow. You've got institutional capital not just holding tokens, but operating infrastructure, validators, subnets, real operations. And you've got publicly listed vehicles whose entire job is to hold TAO and run Bittensor infrastructure for institutional access. That's not speculation. That's plumbing being installed. So what does this actually tell us? This is enterprise adjacent, not enterprise adopted. Think early cloud computing. First it's engineers, then niche platforms, then infrastructure operators. And only after that do big corporations show up, once reliability and incentives are proven. Big companies don't touch experimental engines. They wait until someone else proves it won't blow up. So here's the clean usage verdict. This isn't mainstream. This isn't consumer. And it's not Fortune 500 yet. But it is real. It is technical. And it is early. That gap can mean opportunity, or it can mean risk. And that's exactly why the next chapter matters. Because now we stop talking about who's using it, and we talk about what could go wrong. All right. Before we look at who else is lining up on the grid, we've got to talk about something important. Because you don't really know a machine by how it looks in the garage. You know it by what happens when something goes wrong. And with this build, something already did. Back in 2024, the network went through a real stress moment. Not a sharp pullback, not a bad headline. A real operational failure that affected users. That's the part nobody likes to talk about, but it matters. What matters more is what happened next. The issue wasn't the core idea of the network. It wasn't the concept of decentralized intelligence. It wasn't the engine itself. It was execution at the operational level. The kind of problem young, complex systems run into when they're moving fast. And this is where we learn something important about this build. The team didn't vanish. They didn't deny it. They didn't spin it. They stopped the car. They fixed what broke. And they tightened procedures going forward. That's not flashy, but it's exactly what you want from a pit crew when a car starts shaking at speed. The takeaway here isn't that the system is perfect. It's that it's already been stress tested once. It hit a wall, and it kept running. That matters, because a lot of projects never even make it to that point. Now zoom out for a second. This is a complex machine. AI models, economic incentives, multiple subnets, performance scoring. That complexity is both the opportunity and the risk. And it's also why this project doesn't exist in a vacuum. Because while Bittensor was learning under load, other teams were building too. Different approaches, different trade-offs, different bets on how this race should be run. So now that we've seen how this machine behaves under stress, the next logical question is simple. Who else is on the track? Who's chasing the same finish line? And how crowded is this race, really? Let's line them up and take a look. All right, now we widen the camera, because no serious machine races alone. If this is a real build, there have to be other cars on the track, and the only way to judge performance is to see who it's lining up against. Let's define the race clearly. This is not a Layer 1 speed contest, not DeFi TVL, not NFTs or meme velocity. This is the race to decentralized intelligence, and once you define it correctly, the field gets smaller fast. The closest car on the same track is Cubic, also fusing AI and blockchain at the base layer with big ambition and a different engineering philosophy. More general purpose and more aggressive on throughput claims, but with less real-world time running live AI competitions. Same track, different setup. Then there's SingularityNet, which focuses on publishing AI services so others can call them and pay for access. Useful, but a different race. SingularityNet is about access to AI. Bittensor is about competition between AI. Garage version. One is a parts catalog, The other is a Dyno room. Related, not interchangeable. Next is Fetch AI, focused on autonomous agents that act on your behalf. Powerful, but a different lane. Fetch builds drivers, Bittensor builds engines. They may connect someday, but they're not solving the same core problem right now. Then there's the adjacent category, decentralized compute. Projects like Akash Network and GPU networks that rent hardware. They compete for machines, not intelligence. They give you garage space. They don't tell you which engine is better. Bittensor doesn't rent compute. It pays for results. And that's a key distinction. And then there's the elephant in the room. Big tech. Google, Microsoft, Amazon, OpenAI. Not on-chain, not open, but they dominate AI today. Bittensor isn't beating them right now, and it's not trying to. It's building an alternative path where intelligence isn't locked behind corporate gates. So the takeaway is simple. Bittensor isn't alone, but it is early and unusually specialized. Some competitors are broader, some simpler, some better funded, but very few are trying to do this exact thing, an open, performance-based market for intelligence. That doesn't guarantee a win, but it does mean this is a real race with real competition and real stakes. Now that we know who else is on the track, the next question is whether this build fits the bigger story. Does the narrative match the machine? All right, quick check. Because in crypto, stories move faster than reality. So the question isn't, does this sound good on X? It's simple. Does the narrative actually match what's under the hood? Bittensor sits at the intersection of three big themes. First, AI. Not AI marketing, actual models, actual researchers, actual compute. That matches the machine. No stretch there. Second, decentralization. This isn't trying to be a consumer app. It's trying to be infrastructure that doesn't belong to one company. Again, that matches the build. Hard, slow, technical, but aligned. Third, scarcity. Fixed supply, halvings, performance-based rewards. That fits the fuel system we already walked through. So here's the clean verdict on the narrative. This is not a meme narrative. It's not a quick cycle hype story. It's a long-duration bet that AI keeps getting more valuable and that open systems matter. That's a strong narrative, but it only works if execution keeps up. Which brings us to the last thing we need before the numbers. Is this road legal? Because even the best build gets pulled over if the rules change. Let's talk regulation, quickly. Now, it's time for everyone's favorite part in the garage, the Moo Law. All of these scenarios come straight from the head of technical analysis in the garage. She ran the charts, she ran the math, she ran the stress tests. So let's start with the facts. TAO is trading around $200. The previous all-time high was $767. Circulating supply is roughly 10.6 million TAO, which puts the current market cap around $2.1 billion. The total crypto market right now is about 2.73 trillion. And yes, it's been a rough week, so this is not hopium math. This is positioning math. Scenario 1 is cruise control. Crypto grows over time, and TAO keeps roughly the same market share it has today, about 0.08% of the total market. In that world, as conditions normalize, revisiting the prior $700 to $800 range is reasonable. At $767, TAO would be roughly an $8.1 billion market cap. No new dominance, no narrative explosion, just the engine doing what it already proved it can do. Scenario 2 is gains traction. TAO starts getting recognized as real AI infrastructure. More subnets matter, more usage shows up, and market share improves from about 0.08% to around 0.15%. If the total crypto market grows to 5 trillion, that puts TAO near 7.5 billion, right around prior highs. If the market reaches 10 trillion, that same share puts TAO at 15 billion, which is roughly $1,400 per TAO. That's not hype, that's traction. Scenario 3 is the moonshot. Decentralized AI becomes a top-tier narrative, and Bittensor is treated as foundational infrastructure. In this case, TAO captures roughly 0.3 to 0.4% of the total market. At a $10 trillion crypto market, 0.3% puts TAO at 30 billion, about $2,800 per TAO, and 0.4% puts it at 40 billion, roughly $3,700 per TAO. In that world, the old 767 high isn't resistance, it's a footnote, but that outcome is execution dependent. and only happens if the machine keeps working under load. And for the record, all these numbers came from Lulu, the head of technical analysis in the garage. And yes, she's a pig, an actual pig, 4 legs, snout, and zero patience for bad math. So if you don't like the numbers, take it up with Lulu. The bottom line is simple. The upside is real, the downside is real, and the distance between $200 and the old high tells you exactly how much work still needs to be done. Price is the output, not the input. Execution is the story. Now the only question left is whether this build deserves a permanent spot in the garage, or if it stays on jack stands. Before you go running off and taking an advance at work, we need to say something first. None of this is financial advice. This is a teardown, not a buy button. We're breaking down how the machine works, not telling you what to do with your money. And one more thing before we hit the dyno. Lulu is the head of technical analysis in the garage, but yes, she is also a pig. Actual pig. Hooves, snout, zero tolerance for bad charts. Now let's do the quick dyno. Build quality comes in strong. The architecture is real, purpose-built, and not a copy-paste chain. That's an 8.5. Technology and design score higher. Subnets, performance scoring, and incentive alignment put this at a 9. Tokenomics, the fuel system, gets a 9 as well. Fixed supply, halving schedule, real syncs, and performance-based rewards. Adoption today is earlier, more technical, and still builder-heavy. So that's a 7. Team and execution get an 8.5. Real resumes, real shipping, already tested under stress. Risk profile lands at a 7. This is complex infrastructure, not a toy, and complexity always carries risk. Narrative fit scores an 8.5. AI plus decentralization plus scarcity is a real story, but it still has to earn scale. That puts the overall dyno score right around an 8.3. Garage verdict, tuned up and worth watching. Not a meme, not a finished supercar yet, but absolutely not a kit car. This is a serious build that still has work to do. That's it for this teardown. Thanks for hanging in the garage. We'll see you next time. Let it rip.